Good morning, and welcome to SID Washington's annual conference. While different this year, like everything else, we are very excited to offer a full and varied meeting agenda. My name is Sue Chodakowicz, and in addition to being President and CEO of Nathan, I am also very pleased to serve on SID Washington's Board of Directors. On behalf of all of us, thank you so much for joining us today. I hope all of you are staying safe and healthy. I realize that we all might be suffering from a bit of COVID fatigue, but I believe it is increasingly critical that we think about the impact of this pandemic in terms of longer-term implications and requirements. In other words, that we step back and not just consider immediate and urgent responses, but also longer-term changes and approaches that will be required to operate in this new normal. Perhaps there are even some opportunities buried within for new thinking, innovation, and the like. In this context, I'm very happy to kick off the session today, which will explore this very issue. Therefore, with no further ado, it is my pleasure to introduce our moderator, Masood Ahmed, President, Center for Global Development. His decades of experience in economic development, coupled with his tenures at the IMF, World Bank, and DFID, positions him extraordinarily well to lead this discussion. Masood, over to you, and thanks, everyone.
Thank you very much, Sue. And I'm really looking forward to the next 50 minutes of a conversation on trade, on growth, on supply chains. They're all questions that are being impacted by COVID now, but which we will see with a long tail going forward. Yesterday, the IMF managing director said that developing countries face a long ascent, a long climb ahead, and it's going to be uneven and tough. So trade and growth have always been two core pillars on which developing countries have faced their path towards giving people better lives. And now we're going to have a conversation on how those are likely to be impacted by the crisis and its shadow. We have a really a terrific panel. We've got Annabelle Gonzalez, who is a non-resident senior fellow at the Peterson Institute here in Washington. We have Gail Warrender, who is the head of economic development for the UK's Foreign, Commonwealth and Development Office based in Nigeria. We have Jennifer Adams, who is mission director for USAID in Mozambique. And we have Vaskan Khabayed, who is the director for international economic relations and strategy in Canada at the Global Affairs Ministry of Canada. So different perspectives, and let's get started right away. And I want to really start in the moment. So here we are, 8 months into this crisis. Many countries going through, or most countries in the world going through not just a slowdown, but a recession, fall in living standards. Trade is down this year, and by the end of the year, maybe down quite substantially. And I want to get a little bit of a sense of how the slowdown in the world economy and in trade, and also the restrictions that many countries have put on exports are having an impact on developing countries. And that's why I'd like to start perhaps by posing that question to Jennifer first. Jennifer, you're sitting there. You've seen how it's been impacting Mozambique. How do you now see the current effect of the COVID crisis and the global slowdown and the trade slowdown in Mozambique?
Thank you. Thank you, Masood. It's really a good question. Fortunately, at the moment, we do have a little bit of data that we've been able to get over the last few months, and it has been quite a huge shock in Mozambique. I would say both on the health side, which continues to be central to the whole crisis. because, you know, the best way to address the crisis is really to stop the disease. And then all of the subsequent impact that we've had on the economy and on trade. In Mozambique, the economy never totally shut down. It's not a country that where that would be really possible or likely to work, but for several months there were very restrictive measures, included limiting the workforce, limiting movement, limiting hours. There was a state of emergency. When that expired, there was a state of calamity, which is the state that we're in at the moment, the state of calamity, and a partial closing of the border. So the impact for Mozambique has been very, very significant. It will probably contract. The economy will probably contract for the first time in nearly 3 decades because of the fallout from COVID. Business activity decreased by 65%. We know that from the first half of 2020. A loss of over 10% of formal sector jobs, and tourism, which is important in Mozambique, came to a complete standstill, partly because of the closure to people of the borders, even when cargo and some other types of activity at the land borders remained. So all of that has meant a great slowdown and an interesting shift too, in the sense that in this crisis, as opposed to some of the more natural disasters and other crises that we've experienced in the past, it's really hitting hardest on urban and peri-urban populations. We're used, I think, to thinking of the most vulnerable as being in rural areas. But in this crisis, we're also having to shift a little bit some of our thinking in terms of vulnerability and in terms of assistance to new and different populations, which has also been a challenge for the government and a challenge to us as donors.
Thank you very much, Jennifer. Can I just ask you one more question before moving on to Gail, which is, one of the issues that many countries in Africa have faced is being able to get the equipment and supplies to manage, to fight and contain COVID, whether it's PPEs or ventilators, or has that been an issue in the case of Mozambique? Have the global restrictions on exports and in a way the global competition for limited supplies of these essential products been something that's been weighing on the minds of policymakers there?
It's a great question, Masood, and it was definitely an important factor right in the beginning. If people think back to March, there were projections and estimates that said that in Mozambique, a country of 30 million people, 20 million people would get COVID and 100,000 people would die. So fortunately, that didn't happen. That's not the situation that we're in. But everyone began to take very seriously that you had to have immediate action to prepare the health system and to delay the disease as much as possible to be able to deal with the crisis as it developed. PPE was very scarce for some time. We had to look for really very much non-traditional sources of PPE, aside from the standard supplies that we had been getting, and some non-traditional ways of getting it here. That was true first in the case of PPE. We began to produce some locally. We paid local tailors to make CDC compliant face masks out of local cloth to distribute not so much to health workers, but to people in the health centers and traders at high risk. And then as time went on, we faced the same kinds of problems for testing equipment, both the equipment and the tests themselves. And slowly but surely, and partly through rationalizing and by being successful in preventing a huge onset of the disease very rapidly, we've been able to adjust. But we're still, both the government and the donors, still talking about it on a daily basis and trying to lay the best plans we have to not run completely short.
Thank you very much, Jennifer. And as you say, you know, the the projections that people had about the spread of the disease in Africa and about the impact it would have in the health sector turned out to be not as bad as the reality is not as bad. And I think people are still struggling to figure out the different bits of the explanations for that and what that means for thinking about the evolution going forward. But clearly that competition that you talked about and also the ingenuity in terms of finding solutions is going to be something that will be at play in the year to come. Gail, could I turn to you? Because Nigeria is obviously very different, much larger country, resource-based country, but also one that has many challenges that it's been facing even before COVID came along. So what's your take on that set of questions?
You're right. So Nigeria's had the double whammy hit because from an economic perspective, because the oil crisis, in a sense, has been a bigger crisis than the health crisis. So 90% of export revenue comes from oil, 50% of the government budget. A large portion of the jobs are indirectly linked to the revenue from oil as opposed to directly from oil. And overall, I'd say the economy is more sick than the people. And this is now very much an economic crisis, not a health crisis. So the expected health crisis didn't really happen. And actually, Nigeria managed it very well. They had a good presidential task force. They had very clear guidance, managed the isolation centers, the testing. You know, it's nothing at the scale of other developed countries, but still. I think the real challenge and the real focus right now is on the economy. Nigeria went into this crisis with an empty fuel tank because it had run down its reserves and it was already at a growth rate which was below the population rate. So it was already having a net increase in people in poverty on a year-by-year basis. It was really in a very difficult position. It had a budget which was inadequate spend on health, inadequate spend on education. So that's been the real challenge. The upside, I guess, is that what we have seen is because of the financial and economic crisis, we've seen some reforms now in Nigeria that we have been waiting for years to come. And that's the good bit. So we've seen the removal of fuel subsidy, more cost-reflective, a move towards more cost-reflective electricity tariffs, albeit a bit of a wobble on the government to suspend them with a protest for a couple of weeks. We've seen the licensing of telco mobile money, something we've been waiting for 5 years, which has been part propelled by COVID because cash is dirty and not hygienic. And people couldn't make payments from a distance. So we've also seen a passing of a new company law which discloses beneficiaries, the Corporate and Allied Matters Act. So those are all good things. Could have done with them a lot earlier, but great that we've got those reforms. But they have got limited toolkit beyond policy reforms. So the palliatives in Nigeria were quite limited. The stimulus plan is about half the average of sub-Saharan Africa. And the lockdown was probably too aggressive. So they stopped the movement of goods around the country, except for a short list of essential goods. And that was very, very painful and unnecessary, and has now flowed through into an impact on food prices, because although agricultural products were allowed to move after some time, including agricultural inputs after a bit, because there was no backflow of other goods, the transport prices increased dramatically. Things didn't move to the scale they should have done, and we're now seeing that in a reduced harvest, coupled by also flooding, which, for example, we just had floods which removed 25% of the rice crop. So yeah, it's a story of really now the focus on on how do we get out of the economic situation. We have about an extra 8 to 11 million people that have fallen into extreme poverty as a result of the COVID situation. Over.
Thank you very much, Gail. Yeah. I mean, I think it's really useful that early on in this conversation, you got us into the two big questions facing so many countries in Africa, but also other low-income countries. You know, one that really, for even though they've been more successful than anticipated in managing the sort of initial spread of the crisis of the pandemic and dealing with that, the economic impact has been extraordinary. I mean, it's really and the response that they have been able to come forward with is so much more constrained because, you know, unlike the $12 trillion that we've been able to spend in the rich countries, you know, where essentially our approach has been to do what it takes, and in varying ways, different countries have done that. In most African countries, you know, it's been make do with what you can get, and what they've been able to mobilize is really quite limited. The international response so far has also been a fraction of what people had anticipated as being necessary. So in a week, the IMF World Bank will be meeting here in Washington for their annual meetings, and there'll be lots of conversations about how to scale up that international response. There are various ideas like debt relief, etc., on the table. But the bottom line so far is that if you actually look at dollars moved to Africa or to other low-income countries, they've really been quite a small fraction of what's been needed. So we will come back to some of those questions. I wanted to shift a little bit and talk a bit about the sort of longer term changes that might come from this crisis. And you know, they're still unfolding. It's hard to say exactly what those changes will be, but one issue that keeps coming up is the impact this is going to have on our thinking about global supply chains. So integrated production around the world, and essentially moving to a, you know, from a model where it was just in time delivery of what you needed for your bit of the production chain to a just in case model where you want to have more than one source of your inputs. And it started off in terms of thinking about medical equipment but now it's a much broader discussion about reshoring and onshoring and nearshoring. And I wanted to get a little bit of a sense, perhaps, Annabelle, if I might turn to you, and sort of, how do you see this playing out in terms of, is this really going to have much impact on the development model for many countries, or is this something that essentially is going to be of limited impact?
So thank you very much, Masood. And let me just say a word before going into your question about the impact, the health impact of the pandemic across the developing world. Because I think that Africa has been spared so far, many sub-Saharan African countries, from the most dramatic impacts of COVID-19. But that has not been the case in Latin America, where with 8% of the population, it is holding now about a quarter of the cases in the world. So I think as the pandemic, you know, continues to unfold, we will see what the health impact, you know, ends up being, and certainly for sure the economic impact as well. Now, coming to this point that you were making more on part of the economic impact, let me say I think that the pandemic has brought to the forefront two key questions. The first one is how to improve risk management in supply chain systems, focused more on optimization with little flexibility to absorb disruptions. And the second one is how to protect against the vulnerability implicit on production networks that are highly concentrated in one country or one region. So the main issue is really how to increase robustness and resilience of supply chains. So some governments, mostly in advanced countries, have come up with the idea that countries would be more secure if these critical medical products were made at home, The fact that some developing countries, some emerging economies concentrated production of some of these goods sort of further confirmed the view that self-sufficiency was the way to go, from which it followed that governments could and should use policy instruments like subsidies, tariffs, government procurement, and others to bring production back home. But recent research shows, in the context of COVID-19, that the nationalization of supply chains does not really make countries more resilient. And this is because eliminating reliance on foreign inputs increases reliance on domestic inputs, which are also disruptive due to national lockdowns. And there's an interesting study from the OECD on face masks that basically showed that given high fixed costs, economies of scale on certain and intermittent demand, self-sufficiency is highly impractical unless the state owns or indefinitely subsidizes a mass producer with vast idle capacity. So the option really is more how to diversify production location and source suppliers. And I think there are alternative business models for doing this. And this very much depends on the nature of the industry. For instance, labor-intensive industries may be more mobile relative to resource-intensive value chains. So firms, for instance, may opt to focus on nearshoring as a cost-effective way of shortening supply chains and improving risk management. And we have seen that this was happening even before the pandemic due to trade policy frictions and others, that countries like Mexico have attracted increased foreign direct investment, maybe some countries in Latin America, in Central America as well, my own country, Costa Rica, also a country like Vietnam due to its closeness to China. So nearshoring is one business model. Another one is that companies may look at increased regionalization, following the case of some value chains that are mostly regional in nature today, such as automobiles, for example. And regional value chains open very interesting opportunities, including, for instance, for countries in Africa. But still, I have to say that fundamentals dictate that other supply chains will just remain global. And I can think that a country like Bangladesh or Ethiopia will continue to be, for instance, a very attractive location for apparel manufacturing, for example. Now, other measures may also help, like increased transparency in supply chains and digitization of supply chains. So I think that in general, governments are not good at micromanaging supply chains, not even simple ones. And if you think about more complex supply chains where, there are thousands of components, then, additional government intervention here may put supply chains at risk. Now, one important question that arises from the pandemic, but also even from before in terms of the impact of technology on supply chains is, will countries be able to continue to pursue export-driven models based on participation in global supply chains? And my sense is that, yes, I think the evidence points out that this will continue to be an important ladder for development, but that the bar will be higher. Countries will need to work harder to be part of supply chains, and they will need to focus, and I think this is very relevant for all of us in this conference, on three points, I think, 3 C's, what I call. One is strengthening capabilities to be able to participate in those supply chains. A second one is improving connectivity, both physical and virtual connectivity, digital connectivity. And the third one is increasing competitiveness, improving the business environment. So these 3 elements of capabilities,
can I just interrupt you to say that the third of your point got a bit frozen for some people. So if you could just repeat your third point.
Oh, I'm sorry. So I was talking about the need to improve competitiveness, improve the business environment in particular. As I was saying, the bar will be higher. So increasing capabilities, connectivity, and competitiveness will be critical for developing countries to continue to participate in supply chains in a post-COVID-19 world.
Thank you very much. So we'll come back to all of that, I'm sure, in the conversation. But I think the point you made about diversifying sources of supply not being the same as bringing everything on shore is very important. There's a sort of natural tendency to think that if you can control the whole of the supply chain nationally, somehow it's going to be more resilient and more secure. But I think what you're saying is that if you put all your eggs in one basket, even if it's your own basket, it's still more risky than spreading it around in different places. And the question then shifts to sort of how we organize and think about that. And I want to come to Vaskan, if I may now. And Vaskan, so, Canada has always been a big proponent of a rules-based global trading system, and diversification of supply chains has really only been made possible because of a rules-based global trading system. From where you sit, listening to what Annabelle was just saying, how do you think about it, and what do you think that an international development agency or ministry like yours or others could do to support countries like Nigeria, countries like Mozambique, countries elsewhere, in terms of building their capacity, their connectivity, and improving their competitiveness?
Well, thank you very much. I was very happy to hear. What Annabelle was saying was actually what I was thinking the entire time, in terms of both how this pandemic has affected different regions. We've seen the amount of illness from COVID increase in developed countries tremendously, and have come through now a second wave. We've seen that increase tremendously in Latin America, but not as much in Africa, and not as much as in Southeast Asia. So what it tells me is that one cannot predict where supply chains may be affected. And so really it's about diversity of supply chains that's very important. So as Canada, we've been promoting a rules-based international trading system, strengthening the WTO system, and then also encouraging developing countries to strengthen their resiliency, and particularly on trade facilitation, to ensure that trade in goods are not hampered by regional differences, or not hampered by small differences at border, because we want that diversification to be able to be more accessible and available, particularly to small and medium enterprises, women-led businesses, etc., because they need to access the world market at this point, because many developing countries don't have the resources and tools to support these companies, these small enterprises, at the level that developed countries can. So we are promoting that as a way of ensuring that trade continues on to help developing countries regain their growth that they lost in this last year, and to be able to access international trade and to rejoin the supply chains internationally. I think it's very important that we do not try to become self-sufficient as developed countries, because we do have a lot more resources available. We need to continue on reaching out and having free trade agreements with developing countries, and we are accessing more supply chains, and to think about green recovery and the ability for us to be able to provide regional value chains in developing countries, in places like Africa particularly. We're quite interested into seeing how the African Continental Free Trade Agreement will play out, and how that brings in new supply chains within Africa and creates rules for African trade that we haven't seen before in a continent-wide situation like that. It's particularly with so many countries that have not been so regionally connected as they were connected to outside of their continent. So that is something that we're also promoting, providing funding for, providing some intellectual background for, and we hope to see that as a way of making sure that there's resiliency in developing countries to overcome the pandemic at this point, and for, of course, future development.
Thank you very much, Musk. I want to come back to this question of competitiveness and connectivity and capacity that your three C's, Annabelle. In terms of how ready countries are and how much that is on their agenda. Because if you're sitting in Africa, we've been talking about connectivity and competitiveness for quite a while, and yet most of the assessments that are done comparing across countries, many countries in Africa and many low-income countries don't fare so well on some of these issues, and some of them naturally just take a long time to get done, and some of them are more sticky policy changes where there's sometimes vested interests that hold back the kind of changes that would make places better on connectivity, for example. I wanted to get a little bit of a sense from Jennifer and Gail, where you said, how much is this part of the conversation right now on improving competitiveness and connectivity, and what's the sense of urgency around that? How much is there a feeling that the post-COVID normal is going to be a different normal from the one that we went in with? Jennifer, any reactions?
I think that's an interesting question. I guess the first part of what I would say was that in Mozambique, which is a relatively low income country, a big but relatively poor country. So it's not sort of at the heart of global supply chains, I guess. But one of the things that was obvious right from the beginning was how dependent the country was on imports, even for very, very basic things like food, and particularly from South Africa, which is the big economic power in the region. And that dependence on South Africa for even essential food items was quite precarious, because while Mozambique back in the early weeks of the pandemic was not hit so hard, South Africa was. So there was a certain amount of disruption and a certain amount of concern around the decrease in the dependence and the delays, both on the formal trade, but a great deal on the informal trade, and the fact that had. So that did lead to conversations about what it is that we could do here in Mozambique to try to substitute a little bit for some of the items that grow here as well as they do in South Africa. And are there ways to sort of take advantage of this moment and those disruptions just at a very basic level to try to improve connection with local markets, to try to improve local supply chains, to see if there was something that could be done to use this moment to reconfigure and perhaps work a little bit more with local businesses, which of course leads into many issues. It's not so simple. Lots of quality issues, lots of credit issues, financing issues, but it has sparked that conversation. It's also sparked a conversation a little bit about connectivity, but more in the sense of looking at not maybe so much what we're talking about here, which is the barriers to trade in goods, but some of the barriers to trade in services, and some of the ways that we might be able to work more effectively here with connectivity, with virtual platforms, with diminishing regulations or streamlining, in some sense, some of the process that is very much trade related and that could help Mozambique to be more efficient and more, maybe a little bit more competitive. And that's something that we are having discussions with and trying to raise up and sort of accelerate some of those platforms during the time of COVID to help in the recovery stage.
Right. Gail, maybe also something on how you see how important this continental free trade agreement is going to be. And then I'd like us to move to getting some of the questions that are already coming in from the audience to see if you can address them.
Sure. So on Annabelle's kind of 4 Cs, yeah, we'd love them on the agenda in Nigeria, and generally, they're exactly what we talk about in, the former DFID, now FCDO. Are they on the agenda in Nigeria? Unfortunately not. On the government agenda, they're very much on the development partner agenda. And it's striking to me, I came from Ethiopia and East Africa to Nigeria. And I did see these items moving up the agenda there with the Abiy reforms. They became much more acutely aware of competitiveness because of the garment industry and the challenge of Bangladesh and the cost of logistics. And I think, linking that to the African Continental Free Trade Area, the problem is the cost of transport and the cost of bureaucracy still between the countries. So there have been strides made in the EAC, so the East Africa Community, with the work of Trademark East Africa. You have seen the costs of goods moving from, say, Mombasa to Rwanda, or Dar to Rwanda, or Uganda, coming down quite significantly. You don't have the border stops anymore. So we've seen progress there. They're now looking at a completely paperless system, using a blockchain type trading system. Nigeria is miles behind with that, sadly. There are 179 out of 190 on the trading across borders in the World Bank Doing Business Index. It was one of the last countries to sign the African Continental Free Trade Area, but it did sign, and it is working on how to get up to speed, how to align its legislation with it. So I see some glimmers of hope. Unfortunately, in Nigeria, they closed the borders in October last year, and the land borders, and that's led to a very clogged up port system. It's led to large restrictions on imports. Most food imports are banned. If the goods can be produced in Nigeria, there are very high tariffs. It is very protectionist. So I see the AFCTA as a very long slog, but really important. And I think the leaders will be the outward-looking countries such as the EAC, Ghana, etc. I think we really want to latch onto it. It's the big hope for the continent. But the challenges are the paperwork and the physical transport costs. So Unilever said to us, it's cheaper for Ghana to import toothpaste from Vietnam than it is to import it from Nigeria. It's definitely more expensive to ship things from Nigeria to Cote d'Ivoire than it is from China. So I think we have to be realistic about where we are, but keep the goal in mind. Over.
Thank you very much, Gail. You said something which really is worth just stressing, which is that we're talking more about Africa, and as Annabelle reminded us, there are other regions which have actually been experiencing this crisis differently. But we do have we tend to think about Africa and as a continent when it is, also a collection of countries that have very different approaches, very different policies, and some have been growing amongst the fastest growing economies of the world over the last decade have been in Africa, and then some which have been struggling to even maintain living standards. So I think as you go forward in terms of how effectively different countries on the continent are able to take advantage of the opportunities that come from having a free trade agreement that is continent-wide will vary a lot. Some will be in the leaders and be able to take advantage, and others will then sort of see that and hopefully follow. But I think there will be variations across. We've had a number of questions that people have raised, and I wanted to ask, come to those. So there's a set of questions that really are around the financing. What are the financing needs? Do we have estimates country by country? Do we have how likely is it that with their current resources, the international institutions are able to finance them? And also, will they need replenishments? And then linked to that is a set of issues around sort of debt forgiveness and debt slowdown. So I wanted to see if there are people on the panel who would like to address that and then turn to another topic. Anyone who would like to pick up on any of that? I should just ask Annabelle or Vaskin or Gail or Jennifer. If not, I'm happy to offer 2 cents worth.
Maybe you have things of visibility, not me.
Yeah, Annabelle.
No, let me just say, oops. I see a question, several questions around the role of private sector in the new normal, and how to increase competitiveness or improve local supply chains and security of supply. And I want to link this back, Masood, with the point that both you and Gail were making in terms of the importance of a trade cost reduction in the context of sub-Saharan Africa. This is an agenda that, of course, has been there for a long time. But I think in the context of a COVID and post-COVID world, countries in the region will need to look for new drivers of growth. And regional integration can be a very powerful driver of growth in the context of sub-Saharan Africa. But implementation and full and proper implementation of the Continental Free Trade Area will be relevant. But moreover, and I think this is, every study that I have seen on the topic makes the point that full implementation of the Continental Free Trade Area needs to be accompanied by a trade facilitation agenda. And this, of course, involves the infrastructure, but it goes beyond this. And it's sort of facilitating some of these border crossings. Certainly, when I was at the World Bank, we worked a lot in Nigeria and in Ethiopia. And certainly the closings that Nigeria all of a sudden, every now and then does at the border does not help Nigeria in terms of integrating into the continent, presumably a country that could be a great winner of the Continental Free Trade Area. So to me, COVID, if anything, reinforces the message that one, there is a very significant role for the private sector in going forward in bringing growth to a number of these economies. And the second one is that regional integration can be a very important driver of growth, but without, in the context in particular of the Continental Free Trade Area, trade facilitation needs to be a clear sort of a companion of the liberalization agenda to actually, for countries and firms to be able to leverage the opportunities of the CFTA.
Right. So in a way, if you think about the Continental Free Trade Agreement, it's like an enabler. So it expands the frontiers of what can be done, but it doesn't tell you how close you are going to be to the frontier. So that's really a function of the policies and capacities that you put in place. And as you were talking about trade facilitation and the regulatory barriers to moving things across, I was thinking this is something that applies so much across the world. I mean, right now, as in the UK and the EU, coming out of the EU, it's happening soon. And one of the concerns that many of the small businesses in the UK and on the EU have, who trade with partners across the channel, is precisely the infrastructure is still there. But a difference in rules and regulations could mean that trade flows become much harder. And so they're both working now on both sides to see how to minimize the disruption to trade, not because suddenly the infrastructures become worse, the hard infrastructure, but because the facilitation part of it becomes more complicated, the soft side. Vaskin, any reactions?
Well, yeah, I mean, I agree. And that's one of the things that Canada has been working on. There's an organization called the Global Alliance for Trade Facilitation. Canada, the UK, Australia, Germany, Denmark are members of it, but it's a unique organization in that it also brings in the private sector. So we have global companies as well as some local companies who are members of the trade facilitation, this global alliance. And we actually go into places like Nigeria, like Kenya, like Tanzania, and try to help them overcome these local barriers to at the border to ensure that the trade flows are there and that they continue beyond the pandemic. This happened long before the pandemic, and it will continue on beyond the pandemic of how to help these countries integrate their trade. And I think regional trade like that is extremely important if you think about it in terms of the new growth that will also be required in terms of green growth and making sure that smaller companies can access international trade. It doesn't mean that they have to sell to the United States or to China or to Latin America. It means that they have to get beyond their immediate borders and start working with the countries around them. And this is a great way to kind of bring in the private sector to say, here's where our problems lie in getting things through this country's customs procedures, et cetera. The other thing to look at is the fact that under this new normal, we are also looking at far more digitalization of the economies. And this is something that will also help Africa and other developing countries jump into the new normal of digitalization and being able to trade in goods that are done in a different platform than just physical movement, but also send it out and have customers far beyond what their normal reach would be. And I think this is an important thing to help African countries use the new digital economy to really increase their diverse trades regionally, as well as outside of the region. But certainly regionally, this could be a great boost for African countries and Latin American countries that we're seeing now with this new kind of pandemic force that has required us to really strongly look at this as the new way of dealing with international trade.
Thank you. Well, I guess what you're saying in terms of digitalization is a bit like also in terms of there's a parallel to the free trade agreement, which is that, it opens up a whole set of possibilities that didn't exist before, of things you could do. But again, to be able to do them and be competitive in that space, you're going to have to take as individual countries a set of measures to ensure that, in terms of connectivity or whatever, you are out there. So I think that's important. Can I just say on the set of questions that people had around financing and debt restructuring, et cetera, rather than take up, because we don't have much time left here, can I just point people who are interested to the fact that this week we've been at the Center for Global Development. We've been having a conference on financing for low-income countries, where we've had a session on debt, a session on private financing for low-income countries, one on domestic resource mobilization, and tomorrow we're going to have a final session in the morning to bring that set of discussions together, including the finance minister from Nigeria and from Ghana as two participants in that. So if anyone who's interested, just go to cgdev.org and you'll get details. And if you're interested, please follow that and pursue it. I don't want to use up the time here. We've just got a couple of minutes, and I want to just go to one question. I think, Gail, you wanted to respond to a question that Eric had.
Yeah, so there was a question about the role of the private sector, and there's a question about the non-ODA flows to developing countries. Are they reducing? And we're conscious that remittances is a huge issue for many countries, a big source of forex, a big source of revenue. And yes, that is the big concern. On the concern on the remittances decline is one, some of the remitting countries have got big job losses. The UK, Italy, the US, these were all big remitting countries to Nigeria. So we expected them to reduce by 25%. We're not seeing quite that reduction, but there's also a huge, there's about 6 billion out of the 23 billion in Nigeria that comes from the region. and those are really reducing. What we're also seeing is obviously some of the private equity funds scaling back, investors scaling back plans. There's physical problems with investors actually even getting into the countries. You need to quarantine for 2 weeks either side in many places. So private capital flows are really reducing. And that has many consequences, right from the interbank lending to the equity to business cash flow to FDI, you know, across the board. Over.
Thank you, Gail. I mean, the bottom line is, look, remittances are down by a quarter to a fifth. Private capital's down, largest outflows in March from emerging markets, developing countries. And in fact, in a strange way, ODA flows, that is official development assistance, is down this year rather than up. So, you know, in the middle of a crisis, rich countries are actually cutting back on the amount of ODA they're putting out. So really the only places where we've seen a big increase, or at least the beginnings of a big increase, is in the international financial institutions. And even there, the sort of commitment numbers, which is the amount they commit, run ahead of the money that is actually dispersed. And there's been about $5 billion worth of debt relief likely this year for about 75 countries on bilateral debt that they owe. So I think that that's sort of, the numbers are way short of the 200 billion that were estimated for Africa alone at the beginning of the year. So as I said, there's lots more information in that space for people who want to follow it. Jennifer, last comment from you, and then we'll ask the others if they have any final thoughts before we wrap up.
Thank you. Yes, I really just wanted to say, I think what you just very eloquently said, Masood, is that, you know, sitting here in Maputo since March, there's been there's been a contraction in the economy, and there's been a lot of departures from international business, certainly from international organizations. People left in March. We're sort of lonely, those of us who have been here all that time. And in the work that is trying to estimate what will be needed in critical sectors, health and response in health, as well as in economy, there are many fewer people. And I agree that the outlook is not especially positive, at least from where I'm sitting, in terms of private investment. Many big and important deals delayed in Mozambique, delayed indefinitely, but also on the donor side. And I think that's a bit of a consequence of this being really a global crisis. So that countries that may have been in the forefront previously in terms of development assistance are maybe pausing and waiting. And I think that's something we need to discuss. We need to have on the table. And I think it could be quite an important factor, at least over the next year or so.
Thank you, Jennifer. Baskin, any final thoughts?
What we haven't touched upon is, WTO reform and what needs to be done there, because that will also help international rules-based system and making sure that these kinds of protectionist measures don't come back into everyone's playbook. And that is something that we in Canada are very concerned about. And we have a group of like-minded countries in the Ottawa group that we are working to have a better transparency and to discourage these kinds of protectionist measures, to discourage the fragmentation of international trade, because we feel at the end of the day, that is the way to ensure that all countries have access to the best development and the best market access to other countries for international growth. But that we can leave to another day. But that is an important element in all of this, is to make sure that the rules-based trading system does not collapse and have total anarchy again of how trade continues.
Thank you very much, Oscar, and thank you for bringing us to that. As you say, we didn't have a chance to get into that set of issues today, but looking forward, clearly modernizing the rules-based system, because parts of it really have become outdated by the nature of global trade and global flows. But preserving the essence of it is going to be a big agenda for the new Director General of the WTO. And as we know, some of the leading candidates for it are indeed from Africa. So this could well be the moment when African countries, somebody at the helm of WTO has personally had an experience of working in one of those countries. Of course, there are also other candidates from other parts of the world right now. Annabelle, any final thought?
So building on Baskin in our discussion today, I'd like to say that international trade is a valuable, low-cost tool for developing countries to fight the pandemic and to begin the recovery. So this implies taking measures at the national level, as we have been discussing, at the regional level, for instance, full and proper implementation of the Continental Free Trade Area in Africa, and certainly at the global level, WTO reform, if anything, is more pressing today than ever. And developing countries who are really not producers of many of these products that are needed to fight the pandemic should and are actually very interested in having a multilateral organization that works effectively and promptly. So I do wish the next Director General of the WTO good luck. As you were saying, we have some candidates from Africa, and maybe this would be the opportunity to turn around the WTO and make it a very strong pillar of global growth and going forward. Thank you, Masood.
Thank you very much. And on that note, Jennifer, Gail, Annabelle, Vasquez, thank you for your contributions. And thanks also to all the people who sent in questions. It's been a great conversation and no doubt more to come.
Thank you.